afternoon, friends. Warm welcome. It's an absolute pleasure talking to all of you today in Dubai. Congratulations to the PMS Bazaar team for the first conference in Dubai. I've been telling them to do this for a very long time now. Fantastic crowd. So, since morning, obviously, I've been here and listening to a lot of fund managers, a lot of presentations, and I think a lot of detailing has gone in all their presentations and conversations. A lot of nitty gritty, a lot of technicals. So while I was hearing them, I was thinking, how do we moderate this session? So I thought I'll try to keep this very, very light, very simple to understand. All of us can relate. And now that you hear my profile, it's more to do with sales and business development. So my job is basically to meet investors, distributors on an ongoing basis. So I'll try to take some of the questions which actually I face or people like me face, right, when we meet investors and when it comes to investing in equities. And maybe in a very simple way, if you can touch upon those points and make life easy for investors and distributors and help them decide as to how they should look at equity allocation, right? So we'll keep it that way. We'll try to keep this talk in two parts. The first part will be more short term. So let's say India for next, how India looks in the next 12 months or let's say next 24 months. And then like we all hear that this is a golden decade for India. The 10 years we live now is going to be one of the best 10 years for Indian markets. So then we'll go zoom out and have a understanding of the long-term story of India. So with that, I'll start my first question, which all of you can address and share your thoughts. So what we have seen, sirs, in the last 2 years post-COVID, Indian markets have, Indian economy has bounced back very strongly. And with that, obviously, Indian markets have done very, very well. At least when it comes to global context, we have outperformed some of the global markets. Now, as we hit into this calendar year, we have started to underperform. So US markets are up 12%, NASDAQ is up 12%, S&P 500 is up 4%. Even Europe markets are now rallying positive, whereas India is slightly negative at 2%. We are underperforming by 10-12%. So this has been the start of the calendar year. There is volatility with a negative bias, and there is a confusion now that from aggressive allocation to India, what should be the stance now, given the geopolitical issues, given that the macros in US still seems to be unsettled. And in India also, we are seeing that inflation number is going up and down. So keeping all of this, these things in mind, what would you suggest that in short term, from allocation perspective, what should investors consider from next 12 months or to 18 months perspective? Should they put all money now? Should they stagger it off? Should they wait for some time? So it's more from the timing perspective and in general your view about how the global macros and Indian macros will have an impact on the Indian economy as well as Indian corporate sector performance. So that's the first question, starting with Bharat Bhai.
12 months is a tough call. I never have any capability to make those kind of short-term predictions. Market participants constantly try to time it to perfection, but I have my serious doubts whether timing is such an evolved strength and capability of any investor on a recurrent basis. You can get one of them right, on and off right. Therefore, I won't really like to address it from the point of view of 12 or 18 months that you ask. But without any doubt, I believe that for not just 2, 3 or 5 years, but probably 10, 15, 20 years, India would remain one of the most powerful ideas in terms of driving the opportunity. There is a confluence of factors. Many important reforms have occurred over last 7, 8 years. Some of them have begun already reflecting the effect. Some others are in the process of doing so. And some more reforms are in the pipeline and which would have a further impact in carrying along the journey. But the changes are not shallow, they are deep. The impact will not be for a short term, it will be for long run. And the outcomes will not be small, it will be significantly large. And therefore, it is not merely the rate of growth of the economy which is going to distinguish itself compared to the past or compared to the others in the world. But I think the quality of the growth in terms of predictability, solidity, durability of that growth, and simplicity of it to be understood so that you develop a confidence about it, I think those are going to be defining hallmarks of India's growth compared to the past. If you see in the past, India's growth always was very patchy because it was not on a structural foundation, and therefore the time of decent growth in economy invariably was followed by the punctures and disruptions, and some or the other malaise would creep in thereafter. And which also reflected in the markets where there were short periods of rise, punctured by long periods of difficult existence in the markets. And I think that's going to get distinguished this time is what I believe. Because the growth is on a structural foundation on the back of number of important reforms which have been carried out. Therefore, not only economy will grow at one of the fastest rates compared to its own past or compared to significant economies in the world, but it will be durable, it will be predictable, it will be solid, and it will be confidence inspiring. Apart from that, it will be backed by superior capital efficiency, and the evidence of which is already available in the way the businesses are getting more efficient and are able to deliver superior value in what they are doing. That growth in turn will reflect into the value creation by strong and quality businesses. In turn, it will reflect in the value creation by quality entrepreneurs and finally, investors who are patient, who are long-term, who are disciplined. I think this is going to be one of the biggest transformational opportunities. And as I mentioned, not just 2 or 3 or 5 years, but it'll be 10 and 15 and more kind of long-term journey. That journey will not be a smooth upward sloping curve. Markets never give you so easy and so comfortable. It will be punctured by its violence and occasional way too more enthused behavior. But if you view it with proximity, you will see that ups and downs and violence. If you see it with little bit of a distance, then you will see the smooth upward sloping curve. And that's what I think is the journey looking like.
Thank you, sir. Basically, we are looking at this year, India has been underperforming. So there are the global headwinds, macro headwinds. There are certain issues with India as well. So what's your thought around?
Okay, now I remember. So, I mean, India had a very strong bout of outperformance, although in absolute terms, we didn't do much. We were up, I think, or maybe flat over a 12, 15-month period. But relative to the rest of the world, we did very well. But it's not a permanent state of affairs that we will always beat the rest of the world. It's not going to happen. I mean, no stock can beat the market permanently 12 months a year. No fund can beat that. No country can beat that. You will have cyclical downturns in which lagging markets will outperform. So let's say the US lagged us last year. It's doing a catch-up. You know, China will do a catch-up. There will be other markets doing catch-up trades. Now, that is part and parcel of investing. Okay, my view is very simple that again, on a big macro top-down basis, I don't see where in this world will you get the kind of all factors getting confluenced into an investment thesis as India. And by the way, I don't say this now. When I was working for Citibank in 1989, the reason why I left my job, which was paying me a princely sum of 3,000 rupees a month, and I decided to go out and make a career in investing is because I believed even in 1989 that the next 10 years belong to India. And I'm not making this up. There were colleagues of mine who are now in fund management positions. We were in Citibank who will testify to this. I said, I think it's a waste of time to be working for a bank. We can create our own bank because the next 10 years are going to be fantastic and India will become a significant country. India will become a significant stock market. And trust me, it worked out fantastically. People entering the markets now should have exactly the same perspective. So it's irrespective of which government has come to power, it's irrespective of which leader is there. We tend to storify the recent data points or the recent leadership. In my view, India has been blessed to have had fantastic leaders from the time we became independent. A lot of the fruits of hard work of the 1940s or the 50s in the IITs and the IIMs, of which Bharat is a product, are bearing fruit now, where you can find fantastic engineering talent who are now, and fantastic management talent who head global corporations. I mean, the top 10, 15, 20 big corporations across the world are headed by Indians. All of that cannot be just, a matter of luck. It is simply the foundational bits that successive governments have done. And this government will build the foundation for the next level, which 20 years from now, whoever is in power will reap the rewards of the hard work having been done now. So I think India is just a near perfect story in every sense of the word. And of course, there was a fantastic presentation by Ravi prior to this. I think it's one of the best presentations I've seen in a long time. Which also, it was balanced, it highlighted the challenges, I mean, bad driving on the roads, I think, is a big one.
Yeah.
But I just think that no other country ticks all the boxes the way India does right now. We can talk about this till the cows come home, but in short, barring, occasional fluctuations, which we'll undergo, and of course, there will be in equity investing, there is always risk. And I believe in being bullish, but not in being foolish. Okay? So we must pick carefully. We must always be careful. Okay? It must not be loose in our thinking. But in India, despite a bit of loose thinking, you will still make significant money.
Yeah, absolutely. So again, sorry for probing this, but when it comes to investors, their thought process is always that when we are allocating, what is the situation environment at that point of time? So from valuation perspective, the other argument which is there is that India is still richly priced as compared to some of the global markets.
Richard, I'd like to answer that. Because this I have heard this, India is more expensive than the rest of the world for the last 32 years.
Yeah.
Okay. So, and I've, we've done business with, people managing billions and trillions of dollars. And the sheer stupidity of this line of thinking has never failed to amaze me. A market being cheap or expensive is simply a factor of two things. Okay, or maybe three things. One is the return on equity that the market in aggregate makes. Okay. Second is what growth you expect. And third is what is the cost of capital in that economy. Broadly, these three things determine valuation, right? We all know that. Right. When you look at return on equity for Indian companies, it is heads and shoulders apart from American companies compared to emerging market peers. There is just no comparison. You look at a Chinese company, a Malaysian company, Brazilian company, Russian company, and we have done a lot of these pieces of research over decades to convince foolish asset allocators that, guys, just look it blindly at a P multiple that 15 is more expensive than 8. Please look at the quality of return ratios in each of the market before you make such a conclusion. So India has always been an expensive market, and for very good reason. So that is the short answer to your question.
And may continue. Yeah. Yes, Bharat.
If you permit. I mean, this debate, unfortunately, even in more significant investment discussions, keeps emerging time to time, as if mathematical cheapness is a very easy way to identify value. And if markets were so simple and markets were to be so easy on platter, then by now most of the robots would have taken over the investment processes. Take one practical example. Put China for 30 years. And in the last 30 years, from 93 to 2022, China has produced an incredible economic growth by the stated number, close to 10% per annum compounded. But you put the Chinese stock market returns in the same period, it is 0.9% compounded over 30 years. Now, markets, economists get enthused by GDP size and growth rate and whatnot, but markets are a bit more far-seeing. If you look at last 30 years, the Chinese GDP grew at about 10%, but the market returns of China was only 0.9%. And I was saying that economists love the idea of the size of GDP and rate of growth and whatnot, but really speaking, markets which focus on value creation, capital efficiency, sustainability of growth rate and durability in ideas like this. And therefore, market verdict is far more razor sharp and precise compared to what an economist may ponder over and pontificate over. In the same period, India, and India's economy grew much, much less, at a little less than 8%. And difference between 8 and 10% is not 20%, it is huge when compounded over a 30-year period. But look what happened to the market returns. And this is despite the fact that 30 years back, economy was callow and materially immature. Governance was again in an immature shape. Balance sheets were weak, capital efficiency was still in the shape of emerging. And in general, India was hardly regarded as an economy of relevance to the world. In the context of that, based on the entrepreneurship and the quality of entrepreneurship which has built the businesses, in the same period, 8% GDP growth rate of India has led to 8.2% market returns in dollar terms over 30 years.
Yes.
And 11.4% in rupee terms.
Yes.
And that's where the difference lies. If you plot the Chinese market for 30 years, the PE has been perpetually cheaper than Indian market. If that were to be the argument, why the cheap PE has not translated into a healthy investment return should be the question should we ask.
Yeah.
Yeah, I'll try and address your question in two halves, as you said. First of all, in the short term and then in the medium to long term. And I bring perhaps a different perspective. I'm not a dyed-in-the-wool investment specialist like both of you, but I am a foreigner who's been traveling to India for the last 3 decades. I live in Bangalore. I'm an Indian entrepreneur. We're very active, obviously, in the equity capital markets in India. I think that had we been having this conversation in November of last year, as indeed I was, with a delegation from Gift City to the New York Stock Exchange and the NASDAQ, we would be boasting that actually we were the only capital market across the world, the major capital markets index, that in dollar terms had A, made money, and B, numbers 2 down to 12 were all between 10 and 40% behind India. That was in dollar terms, even pricing in the repeat, and that was over a time period from May of 2021. So I think obviously things have changed since November in the last couple of months, but I don't necessarily think that's a function of the Indian capital markets. I actually think it's a function of global markets that are actually getting ahead of themselves and pricing in a recovery from this horrendous period of high inflation that we've seen in more developed economies around the world. I personally think there'll be greater volatility in those markets. I think that undoubtedly we're all interconnected. Perhaps some of that will filter through to India, but India is relatively well insulated. So I'm not too fixated by the last couple of months and the run-up in the other markets vis-a-vis India. I think, as you have both said, you have to take, timing markets in terms of that time period is incredibly difficult. Medium term, listen, I mean, again, as a foreigner, being in India, it is just the most exciting economy at the moment to be in. globally. All of the factors, all of the metrics that you can apply to the economy, overlaid with and this is not a political point, but India has continuity of government, has continuity of policy. Globally, it is becoming a far more assertive nation. The world needs India right now as well. And for all of these factors, there will be huge tailwinds for India in the medium to long term. And last but not least, if I may, and this is a generic point, you wanted to keep it, high level. What I find most exciting about India, yes, we can analyze, cost of labor, and that was a very good presentation Ravi gave earlier on, and other factors and so on. But have you any idea how good the quality of human capital is coming out of India right now? Those young men and women who are graduating from universities, incredibly well educated, incredibly ambitious, hardworking, and so on. And that, I think, is the secret to the medium and long term for India.
Yeah, thank you so much. So, sticking to short term, obviously, when you go back home in India, what we see is a lot of vibrancy. Flights are sold out, hotels are sold out, cost is going up, consumption is on full swing. Everything is looking very, very good, right? Yet the GDP numbers are falling down. So I was just hearing or reading the tweet from Lata Venkatesh. She's talking about 4.8% for the last quarter. So where is this slowdown actually coming from? Any thoughts, any idea if you can throw us some light here? Where is this slowdown, for how long it may continue?
With your permission, I can take
Yes,
it.
yes.
So, let's be clear about one thing, that in reasonable part, the growth spurt we saw in the last 18 months or so in India, or maybe 24 months, was really the pent-up demand of 1.5 billion people waiting to consume, and they were being prevented because of the pandemic from that consumption. And I always say this, that for a country like India, even without any leadership, we will grow 5%.
Yeah.
You don't need anybody, okay? 1% is our population growth, 4% net of population growth. It's nothing. For me to consider genuine, significant blowout growth for a country which is still in per capita terms, just $2,000 or so, anything less than 8-9%, but it's not going to cut it. Let's be clear about it, okay? We are too easy with praise in saying 5% or 6% because the rest of the world is struggling. That, frankly, is just cold comfort, okay? Just because everybody else is suffering and I'm suffering less or growing a little bit better, that is not good enough for a country like India. We need to grow faster. Now, how will you grow faster? What are your levers for growth? Let's just quickly analyze it. I know time is short.
Yes.
Basically, you have export-led growth, okay? And you have domestic consumption. They're broadly speaking simplified.
Yeah.
Export-led growth is not going to happen. Forget it. When your two big consuming blocks, Europe and America, are in significant economic strife, I don't think you're going to be selling a lot of goods there. In any case, for Indian exporters, that edge is vastly eroded because of competing nations having had currency problems, Turkey being a very good case in point. If you go to Bombay, I was shopping for my home for furniture, I could only get made in Turkey furniture in India.
Wow.
I could only get or largely get fabrics made in Turkey. You go to Dubai, you will find made in Turkey more than made in Bangladesh or made in India. Now, these are countries which have suffered currency collapses of 70-80%. They are big exporting nations. So you have a competitive problem on the export front. So you're left with the domestic market, right? Domestic market had a big pent-up demand, so the hotels and the flights and all that. That's there. People were just not able to consume, so there was like 2 years of pent-up demand. But that cannot keep running forever. Inflation has taken a bite out of people's ability to spend. Let's not sugarcoat that. It has been a problem. Home loan rates have climbed up significantly. So, and real estate is still a big driver of economic activity.
Right.
So those are factors that, like I always say, be bullish, but don't be foolish. We have to see, and you talk to small people, small traders, companies, rural demand, again, has seen a bit of slackening, okay?
Sure.
Urban demand post Diwali again has slowed down a bit. So this big growth spurt will moderate. I mean, it's not to say it's going to fall off a cliff, but we cannot, expect the post-pandemic spike to just sustain
Sure.
endlessly.
So-
Let's be realistic also.
So in short term, maybe we will see some amount of
There
slowdown
will
and
be,
then
there
maybe-
will, there is going to be some moderation, and there should be some moderation in growth expectations.
Yeah, Bharat.
I, on the GDP growth rate part, what Shankar mentioned, I'm in agreement with him. But I have a little different view on the leadership part. I would say leadership matters in every situation, whether in family, whether in a firm, whether in a society or in a country. Leadership makes a huge difference. Environment is dynamic. Dynamic environment spells challenges and risk, and that environment needs to be managed. And even the leadership of the country has to have that entrepreneurial dynamism to handle these challenges and situations and come up trumps. And therefore, to say that, irrespective of anything, India can just hope to grow, I would be far more circumspect about it. I think, the difference between 5% and 8% is a dramatic difference. It's not a 3% difference that you count, because that's where it makes a difference between mediocrity of outcome and superiority of the results. And therefore, I would definitely say given the kind of complexity of the world, given the kind of constant state of flux and challenges, and an ability of leadership to find a way around is a very vital idea. In some sense, if you think about it today, in the world, leadership vacuum in many areas is being filled out by India. One of the most distinguishing aspects typically between a developed country and less developed country has been a policy response and policy maturity. Typically, developed countries have been defined by policy maturity, agility of responses, early responses, and more value-creating responses. But if you look at the global leadership today in the developed world, actually it leaves you aghast. Whether you look at America, whether you look at Europe, whether you look at some of the other parts of the world, and you realize that there is a leadership vacuum, there is a leadership gap in terms of spurring them ahead. And I think one of the most important defining things that I feel which is happening with India today is to provide an important element of leadership in many, many areas where there is a vacuum in the world. And final point on that, I think structurally, the way things are, we as a country are in a position to grow at 8 to 9% today. In the near term, we will not grow at that rate because the rest of the world is in trouble, and therefore international trade and other things will take time to grow at a rate at which it will spur the economy. But given all of that, maybe we'll grow at 6.5%, 7% in the short while. And then as the world mends and gets better, probably we'll move to more like 7 to 8% range, and eventually as things fall in place, maybe higher than 8%. But that is the capability, that is the foundation we are today with.
Right. So I'll come to the third question. You want to add?
Yeah, no, I was just going to say, again, just picking up on what Shankar said, we shouldn't be complacent because India's growth rate is so far ahead of other countries. Although I have to say, as a Brit, if I had a GDP growth rate that was even in positive territory, I'd be thrilled. So, but I think that we also need to recognize that we're in an extraordinary time coming out of the pandemic. The GDP growth rates have not really settled down yet. So I think it's very difficult to see where India sits vis-a-vis other countries. And I think we'll probably have another year or so until we see that trajectory. And the final point is, I think whatever GDP rate India manages to achieve over the next 10, 15 years, it also needs to be sustainable. I think what would be very damaging for India and any other country coming from that trajectory and on that journey to the third largest economy in the world is to have stop-start growth. And I think that is an interesting point to make. Lastly, I think what's very exciting, again, being a South India boy now, is seeing the technology, the research, the manufacturing, the export potential. And now the rest of the world is in trouble in terms of consuming Indian goods. But I think once we develop that capability, that manufacturing capability, the research, invest more into it, and whether it's defense or other areas, I think that will be a big lever, as you say, to ramp up and consolidate GDP.
Yeah, thanks. Thanks so much. So I'll come to the third part. So there's one data where, and this is more specific to investors out here in the Middle East or people who are investing in dollars, right? So we've seen that only 1% of the net worth of people living out here is actually coming into Indian equities. And when it comes to Indian equities, there are two fears. One is about India itself. So that part we have covered broadly. The second part is the currency. So the biggest fear is that India looks good, but what about the leakage of return because of the currency depreciation? While Indian currency has outperformed, yet it has depreciated by 10%. So again, from a long-term perspective, what would be your advice that one look at India allocation, what would be the gross return adjusted for rupee depreciation, still what kind of a return trajectory, and India could produce reasonably good wealth creation over a longer period of time? India part mostly you have covered. You can add some points on that, but more specifically, is dollar really something to worry about, or it's the asset class itself which should be the prime objective?
No, we should worry about everything. I'm not a complacent investor. I worry about many things. It doesn't mean that I don't invest. I invest heavily in India because I live in Dubai, so I'm a non-resident. I have the luxury of being able to invest across asset classes across the world, which I do. But India remains the bulk of my assets as of right now, because I don't see any other market which will give me these kinds of returns. And I'm prepared to take the risk of the currency depreciation. That is embedded in my return expectations from India. And let's face facts, when the world and the other competing nations I was in Sri Lanka and 3 days back, and their currency is down 75%, and when you go to change money, so I gave them a few $100s, and the guy gave me this much currency, and then I said, thank you very much. He said, no, sir, wait, there's more. So
it's like it was lighting in millions.
so Turkey again,
Yes.
So you're living in a world where currencies have depreciated for many countries which are exporting nations. You need to be mindful of that also, that you can't become uncompetitive. And Indian rupee by some measure might be slightly overvalued, which means that it has room to fall. And also do remember that we have had significant outflows on the FPI side, which is pressuring the balance of payments. We ran a deficit last year. By all looks of it, it appears to be a negative BOP year or maybe flattish. So there will be factors affecting the rupee. There's no two ways about it. But I think returns from India chosen well, again, will outpace the currency depreciation.
And I think Bharat Bhai gave the return number for Indian markets, 8.5%, 9% in dollar terms. I think that is what India has done in long term. So I think we should think about, like Shankar sir is saying, think about currency, but I think the underlying asset class has far more greater room to do performance adjusted for rupee depreciation. Still the return profile could be good.
And sorry, I was just going to state the very obvious point that this isn't necessarily about, you can call it rupee depreciation if you like, but you can also call it dollar appreciation. Look at the strength of the dollar. This isn't an issue that's particular to India. We're at decades high historical dollar valuations. And again, it depends whether you think that that is caused by huge confidence in the US markets or whether it's caused by a flight to safety over the last 12 months. But we'll see how that pans out. I personally don't think that's sustainable.
Absolutely correct. It's more about dollar appreciation than,
I'll just make 3 quick points on that topic. I was saying that if you take last 10 years, 20 years and 30 years, Indian market has been one of the top 2 performing markets in dollar terms in each of these periods. And the other country which has figured in that has been America. Therefore, it has been India and America which have been in the top 2 markets in dollar term returns in 10 years, 20 years and 30 years. Secondly, you take a little broader look at where what is the situation in the world. Not that I have great capability to understand many of the global variables. I'm a bit of a frog in a whale, and I'm more focused on India because that's the only market where whatever little I understand. But if you take broad picture into account, many markets in Europe, even on a 10-year basis, have been negative. I talked about China, that frenetic economic growth, but very, very poor market value creation. South Korea, a developed market at $30,000 to $33,000 per capita, 34 years. 1989, it reached a peak. 2023, 34 years negative dollar return in South Korea. Japan, we are all familiar with the struggles of Japan for last 3 decades and more. Which are the other markets? I mean, basically Africa or Latin America, which I know very little about, but these are really not the kind of markets which inspire any enthusiasm. It's only really, as much as I can see, America and India. There is, to my mind, there is no other third market of any substance, size, durability, scale, character, quality, and potential for compounding visible per se. Thirdly, on the currency part, in a way, America is getting rewarded for its bad behavior. I mean, if we see, for several years, America has abused the position of power. First, it abused capital by cheapening it and making the cost of capital close to zero. And when the pandemic came, it wanted an easy way out by sending checks to the people, trillions of dollars, and it flooded the market with liquidity rather than doing hard work of reform. And therefore, when the war happened, they were caught naked and inflation caught up. And one of the ways they've transferred their problem to the rest of the world is by raising interest rate in a ungainly way and transferring inflation to the rest of the world through the appreciation of currency. Whether this kind of a state of affairs will change, impossible for me to predict, and it is quite unlikely because there is no real other currency which can take the place of dollar for a long while. But that doesn't mean that the abuse that America has inflicted in its own system and to the rest of the world, at some stage, the nemesis, I hope it does catch up with them. And therefore, to that extent, ultimately economic power and the current universal currency status go hand in hand. Today, there is nothing which is in eyesight which can replace. But more America abuses the power, at some stage, some of the other reversal forces over a period of time will set into motion. Whether it will take 10 years, 20 years, 30 years, who knows? I have no ability to make the judgment. But I think we have to take into account ultimately the power of a particular asset class where you have a belief will generate the return and where financial policies are sensible. Eventually, both the currency and the asset class return will have a holy union at some stage, I hope and believe.
Yeah. Thank you. So sticking on to the dollar thing, I'll request Richard. They are doing a lot of work setting up their fund in Gift City, right? So for the benefit of all our distributors and investors, could you explain the setup of Gift City and this is a very good route for dollar investors to come into India via Gift City. Otherwise, traditional Mauritius route usage. So what do you see the benefits through the Gift City?
Yeah, shall I? Maybe I'll just give the audience a quick 30 seconds on Gift City, the Gujarat International Finance Tech City, conceived by the Prime Minister of India when he was Chief Minister of Gujarat, located in Gandhinagar, and is a special economic zone, a few hundred acres there, that is technically, obviously, part of India, but for all intents and purposes is an offshore jurisdiction attracting certain advantages for the companies operating there and indeed the investors going through there. We actually were the first operational hedge fund in Gift City. That was back about 2 years ago. The SEZ historically was a very bold, ambitious project. For those who haven't been there, I'd encourage you to go and see the infrastructure. They now, I think, have got 20 or 30,000 people who are working there. Some of the biggest international banks are there, all the Indian domestic banks. There's aircraft leasing, there are funds, there are all types of financial institutions. But the game changers were really two at the end of 2019 and beginning of 2020. One, in the first time in its history, it had a unified regulator, and that has changed everything. So instead of dealing with RBI, SEBI, other multiple regulators, you deal with one regulator. In fact, in the latest budget, even the special economic zone infrastructure area regulator was merged into that one regulator. And that is a massive change, both for the companies that operate there, but more importantly for our global investors. And we have investors from San Francisco through to Sydney, including Dubai, who are all coming through Gift City. Secondly is clarity on tax, and that is very important. We happen to operate hybrid long-only, long-short funds, and on, as some of you may well know, the derivatives income in India attracts business income, 42% going down to 39%, but in Gift City that's zero. So there are very, very significant tax advantages for our international investors and indeed for us as an operating company. What I would say about Gift City, even in India, when I first went there in, it was about 2.5 years ago or something. I'd never heard of it. Half my Indian friends had never heard of Gift City. I hope now that it is on everyone's radar. Again, I do some travel with the team at Gift City internationally to try and promote it as a investment destination. But I would just say, and I hope I'm not insulting anyone in the audience here who might be from Mauritius, but True Beacon, when we first started about 4 years ago, we set up a fund in Mauritius because Gift City didn't have a unified regulator. And, I won't go into detail, but that has probably aged me 10 years, that whole process of operating out of there. It is very difficult for us as an operating company from India to be based in Mauritius, very difficult and opaque for our international investors. And so Gift City has brought, if you like, all of the benefits of being onshore in India, the proximity to the market, with all of the advantages of being an offshore jurisdiction. So I would, whether you're an investor, whether you're a competitor to us, whether you're in finance, I would urge you, if you haven't examined Gift City, go there, look at it. It isn't DIFC, and neither will it ever be. Whether that's a good thing or a bad thing, you can debate. But I don't think it needs to be for India. It needs to be not just a gateway for inflows and outflows of cash, but I think an investment. But when it really does develop, it will be its own ecosystem that will be very, very sort of vibrant. And I think that in itself is...
Have they started serving alcohol there?
Do you know, there are rumors going around. Every time I go there, someone says there's a bar open. No, the short answer is no. Not yet. But there are rumors that I think that it may well start.
But it's good, right? Your liver will take a break each time you're there, so it's
exactly.
fine.
Actually, it's not just about... it's a light-hearted way of actually... I think one of the... Again, when we talk about India, we should also acknowledge India has, its difficulties and friction in its journey. And so does Gift City. It's not necessarily about being alcohol, whether that's allowed or not, but actually you need to attract amazing human capital from across India and indeed globally to Gift City. And unless it becomes more liberal, quote unquote, it won't do that, and it'll never become that ecosystem I talk about. It'll just purely remain a gateway.
Right. So ASK has 3 funds, as he said. Shankar sir also is having a fund there. We are delayed at Motilal Oswal, so we should also have in the next month. So that's the thing. So we'll move now to a topic which is a lot of controversy and all this, and I would love to hear Shankar and Bharat Bhai's views on that. It is coming to Adani. Right, so last 30 days, everybody is now talking about Adani, what's going to happen, and it's creating all sorts of news and negative headlines. So what is your, in general, thought about the group? how relevant it is from investing into India per se. But what do you think where Adani Group is going? How much of it is truth, untruth? Your thoughts on the group and in general what's happening because of the news, or because of the short selling, the stocks going down, half the market cap is down. So any thoughts with Adani you would want to share? Because that's a question which is coming across whenever I'm talking, yeah.
So glad you didn't ask me that one.
Yes, I said too.
Well, I have lots of views, but I don't think this is something that we want to discuss on the.
No, we can discuss. What is the problem?
Sure,
It's okay. I mean, it's one more company listed on the stock exchange, and it has been in the news. And I think every investor, has a desire to know what happened and where it is going to go. And my view is first and foremost this, that I feel very cheated as an Indian when people start mixing the report on Adani as like some attack on India or something. I think that, you're demeaning a great nation like India by mixing up the fortunes of one group with that of the entire nation. It's like saying the Tatas don't exist, the Birlas don't exist, the Ambanis don't exist, and all that India is identified with is one corporate group. I think that is being completely, totally unfair. And I take very strong exception to this line of thinking. That is number one. Number two, it's a problem afflicting a particular group. And that group will have to answer to its various stakeholders, as any group has had to. Sun Pharma had big governance questions just a few years back. It had to answer to it. You can't get away from it by, patriotism or nationalism.
Yes.
It is not going to work, boss. You have to deal with it on its own merits. Infosys has had allegations by whistleblowers and all kinds of people over its history, including Narayan Murthy himself heard a lot of accusations against his own company.
Yeah.
It has had to deal with it. So Adani Group will have to deal with these, the allegations, and I'm sure the regulators in India will have questions for them which they will need to answer to. That is one. But the second point, the larger point, is this: that ultimately, when investors were buying into not just that, there have been many, companies in the history of India as well as in the world. We forget that valuations do matter. Momentum matters. Okay, I'm all for momentum.
Yeah.
Okay, but you can't lose sight of the fact that valuations also matter. So when we start valuing a company which is into gas distribution and makes, $40-50 million of profit, or maybe $80 million of profit, and you start valuing like a tech company of the 2000.com era, as investors, you are playing with fire. It's whether it is one report or an overall sentiment change. Many reasons can contribute to a stock fall.
It could be any trigger, yeah.
We have seen that in 2000, we saw all kinds of companies go up with merit, without merit. Even companies with merit like Infosys traded at 500 times earnings back in the 2000 era. They collapsed, and it took Infosys, I think, to the best of my memory, 10 or 12 years to come back to the price it traded at in the dot-com, boom.
2006.
So, yeah, exactly. So, look, when we overpay for things, irrespective of how good they are, we will suffer the consequences sooner rather than later. And the final point I would just want to say is, I've always believed this. In India, every infrastructure company is ultimately a short.
Yeah.
It's a matter of time.
Yeah, we've seen that.
It's a matter of time.
Yeah.
It'll take 1 year, 5 years, 10 years, but ultimately they will become shorts. Because infrastructure in India is not viable at the hands of private sector operators. Infrastructure can and should be built only by the government, because the government's balance sheet is a black hole. It can run up deficits, fund losses perennially. A private sector cannot. And in infrastructure in India, the paying capacity of the average guy. In Dubai, the tolls I pay, I don't think you pay that even in a month, what I pay in a single trip on Sheikh Zayed Road. Okay? It's simply a matter of paying capacity. While the cost of making 1 kilometer of road in India will be the same as making it in Dubai or in America, but the paying capacity is like a factor of 20, 30, 40x. So private sector doing infrastructure is ultimately going to pay a heavy, heavy price.
A very interesting point.
Okay, that's happened in the previous boom of 2007-8. We saw all of them went bust. This time also many companies doing infrastructure business because their returns are just not available. And you need 30-year capital, patient capital, low-cost capital, which private sector company can access it. So the government should fund infrastructure. Private sector should stay out of it. That's my broad thinking as far as India is
in
concerned.
medium term, are we in a positive or a bull cycle for capex-oriented companies or infrastructure companies? I mean, more from a tactical opportunity perspective. I mean, are we in a positive cycle?
Yes. So that is an opportunity for, I think, a maximum of 2 years.
Okay.
Third year, please be very careful. The government has announced a fiscal glide path to go to 4.5% deficit.
Right.
How will 6% deficit go to 4%? The only discretionary part of your budget is the capex, right? Because interest payments or defense or salaries, pensions, or social, they are inflexible. They are not going to be cut. The capex will be cut to meet the 2026 target of the finance minister of 4.5%. So therefore, be careful. Play this game, but be aware that this game of government capex related plays is not a permanent game. To my thinking,
I agree completely.
It's a 2-year game.
Thank you. Bharat bhai?
Well, on that infra point, I have a different viewpoint than what Shankar mentioned. I think, of course, infra businesses are tough and difficult businesses because 3 critical parameters, capital, timely execution, execution and good time in which assets are built. All 3 are very critical parameters. Within capital, ability to raise the right kind of capital at the right cost of capital and over a period of time, because it's not as if in infra you raise everything in one go. And therefore, these are defining aspects where infra businesses either succeed or fall apart. But entrepreneurs, good businessmen, private sector, when it applies the mind to it, then these are the businesses which can wonderfully be built in the private side. At the end of the day, government has a limitation on the capital to be put into. And the group referred to has a demonstrated record of some of the top-class, world-class assets which have been built in time with a great efficiency in execution and delivery of the returns from those assets and sweating them over a period of time. On the other matters, I think those matters in these forum to be discussed probably may not be the easiest thing to do, but whether infra needs to be done only by the government sector, I would think not. Ultimately, if this country has to move forward and logistics has to be cut down, whether on the energy, green energy, on the roads, on the airports and all the infra assets, private has to play a huge role for that ambition on manufacturing and industry to translate into a reality.
Thank you. So, when you sit with such dignitaries, time is always short and time is up out here. But I'll take the liberty of taking one last question, quick answers. We could not touch upon the long-term story. So these are the 10 years, what we say, the golden decade for India. We're looking at doubling of economy, tripling of per capita. So while all of this will happen over a period of time, what are the 1 or 2 opportunities, sectors which you would be bullish about to play the 10-year story? So now coming more to themes and sectors, maybe your inputs here.
No, I am a big bull on Indian small caps. In my view, that's the
so small caps, market
humongous
caps.
opportunity. But the beauty or the tragedy is that they don't belong to any particular sector. I mean, I meet companies which are so diverse. Each of them is different, which is very good because it gives me diversification. I'm not concentrated in any particular type of sector. But if you pick well and let's say you buy 30 well-picked small caps, 5 will become junks. 15 or 20 will become average performers, but 5 or 10 are going to be out of the park, 50 backers in the next 5 years' time. That's a simplified hack to play India, in my view.
Okay, perfect. So small caps go to Shankar. Bharat bhai, sectors, some sectors, themes, where you would be bullish?
I'm not particularly fond of that approach. My investing approach has been bottom-up. pick business by business for its merits and what I understand, whether in terms of character of the management, character of the business to create value, the size of opportunity, and therefore the compounding kind of predictable growth rate, and capital efficiencies, and buy them at a margin of safety. That's my approach to investment, and therefore I always tend to be bottom up. We can have a lot of generalized view about macroeconomics, country economics, geopolitical factors, and generally we ride on sector and thematic ideas. But in my opinion, all of that in some sense is a mug's game. Really speaking, it boils down to buying a particular business for its merits or otherwise, and what you understand or do not understand of it. And therefore you make sense or you make a hash of it. It all boils down to the individual businesses. But in a country which is on move, I'm sure a lot of sectors will do well. But when you ride on a generality of a theme or a sector, you lose the sensitivity to the specificity of a situation for a particular business or its merits, or your level of scrutiny comes down, intensity of examination of the merits or otherwise comes down. And therefore you tend to ride in a generality and float on it rather than do the hard work. Researching each business is a huge challenge, but trying to ride on a general theme is a perfect way of ensuring that we'll make enough of the mistakes on the way.
Right. Richard, at your fund house?
So I agree with that. But if you had to put a gun against my head and say which sectors are exciting, I mean, they're all exciting. They're all going to grow. It's about which ones are going to grow faster than others. I think that obviously financial services has got a way to go. So that I think is a very obvious player over the next 10 years. I personally also think that healthcare is an exciting play in India over the next 10, 15 years. And then last but not least, I'd say anything that's connected to either the infrastructure play in India or indeed companies, and I agree totally in terms of that investment in companies, that's what we need to look at. But those companies that are not just solving problems or aggregating business in India, but have the capacity or the vision to do that globally. And I think that's the phase that we're in now. Perhaps to finish off is to say what's most exciting, I think, in India is not just about the relentless sort of focus on the Indian market, but how can these amazing Indian companies do even better solving global problems?
Great. Thank you so much. Thank you so much, Bharat Bhai, Shankar, Richard. Thank you all of you. Thank you, audience. Thank you so much.